What's up, guys? Mr. J here again. Welcome to another video. So, in this video, I'll be going over a strategy, a smart money strategy I've been using for a while now, and I found a lot of consistency in this particular strategy, and I'm very sure it will also help you, to be consistent in the Forex market, right? So, basically, we'll be talking about market structure, liquidity, imbalance, and POI. Yeah, we'll be combining this smart money concept together to be able to make trading decisions, right? So that being said, I'll be giving us little by little steps, definitions or explanations of each of these topics over here, right? So that being said, let's just get to it. Let's start with market structure, guys. So market structure is very, very important, as you all know. Um, Understanding market structure solves about 70% of your problem because if you don't understand market structure, you have issues because you don't even know what you're doing. You don't even know what you're looking out for, right? So it's very, very important to understand market structure so you can know what you're looking out for in the Forex market or anything you're trading at all, be it crypto, be it stocks, whatever it is, right? Be it indices, right? That being said, let's just get straight to it. So over here right now, we could see this structure which I identified here. This is a clear uptrend, right? From the structure we're seeing here, market is forming higher highs, right? And higher lows. And we're having breaks of structures, indicating that we're in an uptrend. And this also over here is the market indicating what's a downtrend, that we are in a downtrend, right? So this is just the two basic uptrend and downtrend, right? So that being said, let's get to the next one, which is liquidity. Liquidity. So I gave us a little bit of definition here on liquidity. I said liquidity represents resting buy or sell orders in the market, right? This is buy stops above highs and sell stops below lows, right? So price basically targets these sell stops, these liquidities, and then they become fuel for market to move in a particular direction, right? I think this is self-explanatory. What it means is that this market is basically hunting this buy stops and sell stops, and then when market takes them out, market uses them. They serve as fuel for the market to push out or to push on to the next level, whatever he wants to do, right? It's very, very important that we understand this. So after that, we'll be looking at imbalance, right? I'm trying to give us all the definition before we just get straight to the main strategy. I'm trying to make this video not to be long. Right, so the next one we have here is imbalance. Imbalance. So I gave a definition here. I said imbalance is a surge in buying, either buying or selling, right? That leaves behind a gap, right? A surge, a massive surge, in either buying or selling that leaves behind a gap, which the market is gonna come back to likely completely fill it up, right? The market will come back to fill it up. All right. So that being said, we'll move on to the next one, which is what the POI, the point of interest. So this basically just means I didn't give any definition over here because I think everyone should know this. This basically just means price coming to tap on either your order block or your demand zone. They basically almost mean the same thing. So price is coming back to tap on your order block. An order block is a level or a candle, where market has placed the big institutions have placed their either sell or buy orders, and then the market is going to come back, likely going to come back to tap onto those candles and activate those orders before the market will now continue in any direction which it intends to go, right? So it's very, very important you understand these definitions. So this being said, let's just see how we can combine these tools to how I combine these tools to make a strategy. All right, so assuming I come to the market and the market is giving me something like this, breaking structures to the upside, right? So as you can see, we're in a clear bullish trend, right? And I want to be trading in line with this trend, right? So based on my strategy, based on the market structure, the liquidity, the imbalance, and then the PUI, this is how I'm going to take my trade, or this is what I look out for when I want to take such trades, right? The first thing I want to look out for is to know the trend of the market, which is the market structure. Know the market structure, right? And then the next thing I want to look out for is liquidity. I want to see some pool of liquidity or an inducement or whatever, something that looks like a zone where the market will likely come back to come and take out, right? And then I look out for my imbalance, and then I want to see markets come back to my PUI. And for my PUI, I use my order blocks for my PUI, right? That being said, let's just get to it. So now we're in an uptrend over here. Market is breaking the higher highs. Now, as you can see, we have taken out this external high over here, and then market now comes back into this zone. Now, the next thing I'm looking out for is for some level of liquidity to build up. Now, once I start getting something like this, because all this is anything that forms inside of this zone is an internal structure. So I want to see markets give me some structures inside of this zone, telling me that okay, this is a clear build up of liquidity where market would likely come and sweep, right? So market is giving me something like this, and then it finally breaks above this high to create what a new high over here. Now it has taken out what buy stops, resting above what this high, right? Then it creates a new high over here. So let me just quickly identify this, outline this as my high, right? So this is my buy stops, ESL, right? Market has taken out the buy stops, resting above this high over here, right? And basically what I'm waiting for now, so I've gotten my market structure, which is an uptrend, right? This market is in an uptrend, right? And then I've seen what my liquidity, so you can see over here, this is the liquidity, my internal liquidity, a build up, right? Indicating that okay, this market will likely come on back and clear this liquidity. If you don't know about liquidity, I think I'll be making a special video on that maybe in the next video. I'll be explaining the types of liquidity we have, structural liquidity, engineered liquidity. There's so many of them, and I'll be explaining them in my next video, right? So we have number one, our market structure. We have number two, our liquidity. So right now we have liquidity inside the structure over here, which the market will likely come back to clear. And then of course we have very, very important, we must have what? An imbalance by the zone, right? Must have an imbalance. And our imbalance is like we said in our definition, is a massive surge, a massive surge. So in this case, we are moving upwards, so it's a massive surge to the upside, right? So this would be our imbalance, right? Our imbalance zone. Very, very important. We must have that imbalance, or this imbalance validates our trade. Now, below this imbalance, we will now have our POI, which is what? Our order block. Our order block now becomes what? Our point of interest, our POI. So I just outline this and draw it out as was my POI, right? Now this POI, I'm using my order block as my POI, which is the last candle before the massive move upwards or downwards, right? So as you can see from these charts, I have number one checked, which is my market structure. I came online, I opened my charts, and I realized that we are in a bullish trend, right? That is number one. Now, number two is that I want to see some level of inducement or engineer liquidity, whatever it is, but I want to see some level of liquidity internal inside the zone. In this case, is internal. It could be internal. It could be external liquidity, whatever it is. But I want to see some liquidity build up, right? and which the market will likely in time come back to clear, right? Which is number two. And then I said number three, I want to see what my imbalance, which is here is my imbalance zone, which gives me number three, right? And then lastly, I want to see what my point of interest, which is my order block as my point of interest. And now once I've gotten this, right, the next thing I'll be looking out for is just to wait for what? For market to come back, market to come back and then come back from here and then clear this liquidity resting here, then completely fill in the inefficiency, which is the imbalance zone, and then finally tap into what my point of interest, which is what our order block, right? Our order block, and then market now targets where this buy side liquidity over here, which is what our external high over here, right? To continue the trend, right? So this is basically my thought process of this strategy, right? So that being said, I'll be showing us some live examples. Some live examples. Let's look at some live examples, right? Okay, so I think I have one on Chef JPY, right? This is CHF JPY. All right, so the first thing we look out for what is the market structure. We want to know what's happening, where is the market going, where is it coming from, right? So obviously, as you can see from this chart, we are in an uptrend, right? Market is breaking a series of highs, creating breaks of structure along the way, right? So I've been able to identify that we are in an uptrend, right? So I want to be trading in line with that trend, right? So as you can see from this zone over here, this is a low, right? A higher low that breaks what? A higher high, right? Now market comes back to give me what? Liquidity. Now if I go to my daily time frame, right? You will see that we have what? We have what? An imbalance over here, right? Which is what our number three. Number one was what? Our market structure. Number two was our liquidity, and then number three was what? Our imbalance over here, right? So as you can see, we have one, two, three, all complete, right? And then lastly was we have what? Our order block. So we use this as an order block, which is the last candle before the massive move upwards, right? So this here becomes what? Our order block, right? And then market was after a while, so you can see, let me go back to the 4 hour time frame. The 4 hour time frame. So after market breaks this high, comes back to give us our liquidity, then taps up a little bit again, then comes back to take out this liquidity, very, very important, right? And then fill the imbalance and then tap into what? The order block. And then we targeted where? We targeted what? Our external high, which is the buy side liquidity resting over above this high over here, right? So this is simple, simple stuff, right? Now the same thing applies in the selling scenario, it's just vice versa, right? So yeah, the next one is GBP. Let's look at GBP JPY. I think either something is about to play out here or I already took, okay, I think something is about to, okay, so this week I'll be looking out for GBP JPY, right? This week I'll be looking out for GBP JPY. So let me just go over my thought process again in this particular trade on GBP JPY. So as you can see over here, okay, let me use the 3 hour time frame. See over here, so this is our inducement over here, right? Our inducement. So from the market structure, you realize that we was in a bearish trend from this zone over here, from this particular level over here. We have been selling from here over here, right? So we're in a bearish trend, right? So that's the market structure on this particular. So this trade is a lower time frame trade. So from this trade, we're in a bearish trend. So I want to be looking for sales on the 1 hour time frame, right? And now this is the structure, yeah. And then we have what? Our liquidity, which is number two. Number one, our market structure. Number two, our liquidity, right, which is over here. And then number three is what? Our imbalance, which is on the 3-hour time frame. We have what? An imbalance. So as you can see from here, this is our imbalance over here. This is our imbalance over here, which is number three. And now what we are expecting what is for market to what? To come back, take out this liquidity resting over here, right? And then completely fill this imbalance or tap a little bit on it or fill it completely and then tap into the other block, right, which is the supply zone. And then we'll now target our external low over here, which is what our sell side. So guys, I don't know, I hope this makes sense to you. I think I have another one on GBP USD. One played out. Okay. I'm also waiting for this in this new week, right? Let me just go over this one too again. Right. So you can see this is even an A setup, right? So we have this high over here. Market is already reacting from a higher time frame PUI, which is this zone over here, right? So we have this high over here. Market comes, takes out this high, and then prints what a new leg and gives us what an inducement, very, very important, which is what our liquidity, very, very important, right? Gives us our liquidity. And now we want market to come out, to come back, take out this liquidity, completely tap, fill this imbalance, and then tap into where our POI that will target where the external low, right? So I really hope this video um helps you to understand some smart money concepts better. I'll be posting another video on liquidity, let's say probably next week. So try subscribe to this channel. You don't want to miss that video. The video promises to be very, very, informative. So yeah, that'll be all for today's video, guys. So see you in the next video. Mr. J, peace.